you the ag information you need. This is Market Talk, produced by the American Ag Radio Network. Now, here's your host, Jesse Allen.
Welcome into another episode of Market Talk. Thanks for joining us here on this Thursday, February 10th. You can find us online, markettalkag.com. That's our home on the web, markettalkag.com. I'm your host, Jesse Allen. Thank you again for joining us and making us part of your day. We saw the markets take a big reversal as we worked through the midday and ended up finishing lower after a higher start. We have plenty to talk about here after Thursday's trade. And joining us today here on Market Talk, we have Bryan Doherty with Total Farm Marketing joining us. Bryan, it's great to have you on the show, sir. How are you today?
You know, I'm pretty good, Jesse. Maybe a little better than the markets, which had a great start today, but kind of a sluggish finish with reversals posted in just about everything agriculture and equities.
Yeah, let's talk about that a little bit here. You know, we had strong gains early on in the day session here and even the overnight after those CONAB numbers came out for lower Brazilian production. And then it just seems like midday, the bottom fell out of the grain markets. Is this just a case of fear of things being overbought right now, or what's going on?
I think you can kind of find what you want. What we couldn't find, and I can't find at least as of this conversation, is any one or two things that you can directly point to and say, oh my goodness, look what happened at noon today, or look what the news was. I think in totality what we've had is some really strong markets and prices pushing new highs today, and there's a lot of short covering, which means traders buying back the contract. You probably had a lot of traders adding to the long position in a lot of commodities, and it just sometimes happens where the market runs out of steam. There might have been a technical signal. We got to the top end of some Bollinger Bands. Stochastics are overbought. We might have had a crossover in stochastics today in the market. And things just start to come down, and then traders, if they're long the market, might put stops up underneath, which means that's an exit or a trigger point. So as the market goes down, they get triggered out of positions, or someone may initiate stops to enter a position. So all these things can kind of happen, and I think, or we think, that might be in part what happened today as well. Export sales for corn were very mediocre, but outstanding for soybeans. Weather in South America still has a lot of question mark, and to your point, the CONAB drop in soybean production. The number isn't the new numbers, private estimates have been out there, but it's confirmation from let's say very reliable or credible sources. CONAB is the equivalent of the USDA, so those numbers matter. They're just not some private firm out there throwing numbers. So it was kind of a combination, I think, of all those things, and it just everything just had a risk-off day by the end of the day. I mean, including the equity, as I mentioned, the Dow Jones down over 500 points.
So when we look at things here, Bryan, where do we go from here after a day like today with a big reversal in these markets and after all the bullish momentum and run-up we saw with that WASDE report? Because really it felt like the trade yesterday just kind of took those WASDE numbers, digest them, and went right back to the fundamentals that we've been trading. So where do you think we go from here after a day like today in the markets?
Well, I think that's exactly what happened yesterday, and it almost seemed like the market was ready to buy when it didn't get some sort of negative surprise. And so the numbers weren't really bullish by any stretch, and up it went. I think the market focuses back on the fundamentals, and the market's job is to find a equilibrium price to fair price. So is 60 or 70 cents higher on beans this week a fair price? Is it really 40 cents? So the market will probably figure that out in the next couple of days. I think you should be prepared for just about anything. But the producer who is holding corn and soybeans, today was a very big signal that, hey, we may have run out of friendly news. The CONAB numbers friendly. The export sales numbers were friendly for beans and not corn, but we may be running out of news to keep feeding the bull. If I'm a farmer, I'm selling some inventory today, and I think that's part of what happened today, too. If prices reached some levels this morning that blew right through kind of some big numbers, and when I talk about big numbers, March corn including through 650, I think that triggered a lot of selling in the corn from producers. Soybeans in March over $16. You look at it in the morning, the producer, and go, wow. And then you see it move up a little more, and I think producers are selling, and I think that weighed on the market as well. And I think you need to sell some into this. This is too much, too quick. Take advantage of it.
Well, Bryan, as well, I like your thoughts there on taking advantage of this, because it has felt like for a while that just this almost parabolic move in the grains is getting us into this territory where we could see days like today. And if for some reason we go another couple of weeks and the combines maybe find a better yield across parts of South America, what could that do to these numbers? It just feels like, that whole stair step up, elevator down, but maybe in this case it's been a little bit more of a escalator up, elevator down scenario possibly coming in here to the grain markets.
Yeah, it's a nice visual, and that's what happened today. So let's not get over our skis. Let's recognize that, hey, you've got declining crop conditions in the southern hemisphere, and that's supportive, but to what point, to what degree? So the point I guess I was trying to make before is these are really high prices, full of value. I know most people this morning, man, they were dreading any sell they made. By the afternoon, they were pretty happy with it. That's the emotion of these kind of roller coaster markets. But keep in mind the value of these crops, and keep in mind that volatility is likely to be here for a bit. We're still going to have to deal with this Ukraine-Russia deal or war or whatever it is. I shouldn't have said war. But this build-up tomorrow and the next day and the next day, you're still going to have to deal with weather conditions in South America. The market is still going to have to deal with fertilizer and supply disruption, high energy prices, inflation, all of these things. But kind of goes back to the idea of make sure that you do make some moves on rallies. The numbers are out there for the South American crop. If that more adverse weather comes along, then maybe those numbers are going downward. But you're talking pretty big reductions already in soybean production. And to your point, if combines roll, they might find that some of these beans have been getting rain, maybe too much rain in the northern Brazil and eastern Brazil regions, have better than expected yields.
Bryan, let's take a look at livestock real quick as well today, and kind of the same story. We started mixed to higher there. We had, I would call it, weekly export sales for beef and pork, at least down from the averages, but that we turned around and finished mostly lower in cattle and hogs today as well. So what is your thoughts? What's your take on the livestock market after Thursday's close?
Yeah, pretty much the same thing. You've got a really steep rally here. You take something, look at something like the April cattle here at the end of January was trading under 140. And then today you've got a high in there just under 149. So you got $8 or $9 rally, almost unabated. Again, hit some Bollinger line thing. Maybe that triggered it. Nice rally. I'm not going to read too much into it. I never read too much into a reversal day. It's really the day or two after that you want to take a look into it. We think the cattle market is well supported. It's like anything else. It's got a big rally, a good run. As long as it's had an outstanding run, not unusual for these traders. There's been a lot of money from commodities. Not unusual to see them, the things start to reverse, pull the pin, or maybe some of these what we call black box type traders, where it's all mechanical on algorithms and things like that. That when line A crosses line B, there's no question it just triggers the sell. That might have happened today as well in a lot of markets.
What about the dairy market? What are you seeing over on that front here as we head towards the end of the week, Bryan?
Yeah, real good demand, good recovery in the milk market here in recent sessions, punching in new highs in some of the contracts. Again, you can argue maybe in some of these contracts, very small reversals, market still trading, but looking there like new highs, but potentially running out of gas again. Last time we saw these kind of gold prices, they were on higher feed, and so the dairy produces higher feed. So what it probably tells us is the market is supported for now, because when you get the higher feed costs, even higher prices, we're probably not likely to see real rapid expansion. But nonetheless, we probably do down the road, especially the grain markets could be peaking. That's a big could be, but they are peaking and they start trending downward. The milk market, you want to be, if you're a dairy producer, you really want to be looking out the next 6 months. You've got some good values. A lot of 22s in front of the screen today that just kind of are begging to be sold.
Well, Bryan, great stuff as always. Any final thoughts you have for us here on this Thursday?
Well, I think today is a prime example of being vigilant and also setting those price orders above the market. If I told you a week ago what you could get for beans this morning, you probably would have laughed, but it was out there. So put your wish orders out there. You have days like today where they just get invincible and then very vulnerable. And that's how we ended, on a vulnerable note. So they'll keep selling into the rallies. Hard out gets tops, but you can certainly keep your cash flow moving, and you want to retain the ownership of it. You're only a phone call away. If you have an advisor, you don't have a phone call away. You can own whatever you want to own, but it's hard to get those prices back if you own a bunch of something and don't take advantage of it. And then prices tip over.
Well, Bryan, if folks need a little advice, they need an advisor, I know they can reach out to you and the team there at Total Farm Marketing to get a little help and do just that. What's the best way to get a hold of you guys?
I'd say give us a phone call, 800-334-9779. If you want to talk to me, ask for extension 300 or just ask for Bryan Doherty.
Well, Bryan, we appreciate the time. Thank you for joining us on this Thursday, sir, and we will talk to you again next week. Have a great weekend.
Always my pleasure. Thank you much. Bye-bye.
And again, that's Bryan Doherty with Total Farm Marketing joining us here today on Market Talk. Thanks to Bryan for joining us on the phone today due to some technical issues, but glad we could connect with him to get him on the show for his normal Thursday spot. That's going to do it for Market Talk here on this Thursday, February 10th. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great rest of your day.